Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is February 5th, 2013. Doing another session of LiveCharts, going over some stocks that you guys have sent my way and trying to give you guys some direction on the overall market, particularly in these last 4 days, which has been very erratic behavior to say the least. So I'll go over the market, go over the existing positions in the swing trade portfolio, as well as go over some of your charts too. So I do try to keep these under 15 minutes. Sometimes they go longer, sometimes not. But anyways, that's the benchmark that I strive for. All right. I guess it should be no surprise that we're up, significantly again today. We were down significantly yesterday to about 1%. The day before that, we were up about 1%. So I guess the fact that we're zeroing in on a 1% in gains again yet today is not that surprising. I think the best chart is probably what we're seeing in the SPY. As you can see, this 4-day pattern, actually it's about more like a 5-day pattern. It looks very, very jumpy. So essentially what I have done is decided that a break higher or lower out of this range is going to determine where we go as an overall market. So if we break below yesterday's lows, that's where I'm going to want to start adding some more shorts to the portfolio. Right now, we're not anywhere near that because of this bullish kicker that we're getting today. To the upside, I think we're going to need to break these highs that we saw on Friday in order to move much more to the upside as well. Otherwise, we're just going to be stuck in this consolidation, and that's really hard to trade in, especially when it's in that tight of a range, because you're just going to get whipsawed back and forth like what we're seeing in some of the existing positions that we have on right now. We have a balanced portfolio, 2 longs, 2 shorts, probably appropriate for this kind of market because there's no assurance of what we're going to see on a day-to-day basis. So I'm a little bit like a wait and see type of mode here. I'm not really sure what direction this market ultimately wants to go in. If you asked me yesterday, I said closing below the 10-day moving average for the first time in 25 sessions, and just putting in some new lows that we haven't seen in a while was significant. Whereas to what we're seeing today, a bullish kicker approaching new highs, not quite there yet, is a bullish sign. And the day before that, when we closed at all-time 5-year all-time highs, that was a bullish sign too. So there's a lot of mixed signals, and it's not a bad thing if you say to yourself, I don't know what direction this market's going in right now. It really is not. In fact, it's a more of a sign of maturity on the part of a trader to be able to say where this market is going right now. It's not really telling us, and that's the mindset I think is important to have right now. It doesn't mean that you can't trade, but you got to trade cautiously. There's an old saying that, I don't know if it was my pops that told me this or somebody else, but if you test the waters with both feet, you're going to sink to the bottom. So we're testing the waters by putting on some trades, but we're not doing it with both feet, because if we get too heavily short and the market rockets higher, then we're going to get beat up pretty good from a capital perspective. If we get too long and the market decides to top out and drop lower like we know it can do in a very quick manner, then we're going to be hating ourselves for going with our somewhat of a prediction. So right now, having a balanced approach to this market is absolutely of utmost importance. All right, let's look at some of the positions that we have in the portfolio right now. All right, first position would be GLW. This one's running against us some today as well. We have done a pretty good job up to this point of making some gains. I'm not going to let this thing run against me. I think we have a stop loss at 1227. So it would have to run significantly higher for us to get stopped out of that, more than 3.5%. So I don't see that happening today. But what I do see this as being more like what we saw here or right here, where after a few days of selling, it does pop a little bit. So that's not really a worry or a beef with me at the moment on GLW. So that stock I don't see myself getting out of or anything like that today. Simply a bounce after a few down days. I expect that the trend will continue to the downside. Next chart. UAL. All right. I don't like the action in this as much as anybody, but it doesn't invalidate our trade. We're still trading below this 10-day moving average, which is healthy or unhealthy for the stock, but good for our position. It's still in a bear flag formation. We did pop out of it, but it came back underneath it, so it's a good sign as well. And if this market does roll over, I think we're in a good position for this stock to drop in sympathy as well. So, and you look at the 5-minute chart over here on the left-hand side, you can see where it's gone up and then it's consolidated a little bit. It may break those highs, but if it doesn't and it can get back below 24.31 or so, or 24.32, that would be a great thing to see for the remainder of the day. All right, and the two long positions, SWHC. SWHC has actually come, in the last, few minutes or half hour or so, has come off the highs a little bit, but it's still trending up higher, 3 days up. It did get to that $9 level today, which I thought was a great sign. It needs to get up to 9.10. At that point, I may decide to either A, take the gains, or B, increase the stop loss. In this particular stock, I probably will increase the stop loss and create a new projection for a new target. Maybe around 928 would be the new target. But we do have a 50-day moving average that's looming overhead, but I don't think that's going to play a huge factor in this stock. You can see from history, it really has ignored that 50-day moving average for the most part. And the last one, DBA. All right, with DVA, breakout still valid. We are down a little bit on this trade, but it is above 115 still, and I think you have to assume that the direction is still to the upside on the stock unless the market moves down lower in sympathy, in which case it'll probably take DVA with it. But we are hedged for that possibility, and DVA really just needs to break above 116.77, and I think you'll see a lot more buyers come into the picture. Notice the 10-day moving average is holding quite nicely for the stock. We tested it today, and it has held. So definitely some good things to be excited about with these positions that we still have in the portfolio. Yeah, it's not a perfect day for us right now, but overall, I think the positions are still legitimate and worth holding on to. Let's go ahead and move on to some of your own trades and see what we got there. That's the old cell phone there for not forgetting to put it on mute before I went live here. All right, QCOR, you've got this huge base. It's biotech, so you always got to be wary of these things, as evidenced by what we saw in September, where it dropped from in the 60s all the way down to the 20s. That's why I'm not a huge fan of trading these things from a swings perspective, because they can really burn you pretty good. But yeah, I mean, it's got a base. You could say that when it broke above 2609, that was a good breakout point there. I wouldn't have taken it there. I think for me to get really excited, it's going to need to break above probably about 3016 or so for me to really get excited about it. So that's quite a long ways away. So I would put this on the back burner for now and come back later. ESI. ESI as a short, definitely legit. You just draw this downtrend here. Let's see what we're working with there. Yeah, I mean, I don't think there's anything not to like about this. I'm going to add it to my short list. You have a lot of things working against this stock that makes it set up as a great short play. This level of resistance that is rallied into, and then you also have a downtrend as well. Education stocks, man, they've just been bearish, it seems like, for years now, and a lot of that's just been with government funding for them just going away. But yeah, I like it. I like it up against the downward trend line. This is the third retest of the trend line, so that's a positive. You could say that it's flagging there, but considering the fact that it has a heavy, resistance overhead and as well as a downtrend, I think it makes for a great short candidate. Maybe even one that I take today if this market wants to peel back some for us. Costco as a long. I don't see a clear edge in getting long on Costco right now. If you're in it already, I would probably just either follow this 20-day moving average as support for your stop loss, or that's pretty much the only way I would probably play it if you're in it right now. I don't see a clear edge or anything that says this thing's going to keep going up. It does have a long-term trend line that it's working off of, so there is a risk that it could eventually at some point pull back to this $99 level. It's breaking out above some resistance, but this thing here, that's really weird and sort of spooks me a little bit on the trade because it sort of messes it up quite nicely. Or not nicely, but yeah, it messes it up quite nicely. Let us look at WU as a long. WU looks like it's getting overextended. You could say that now that it's filling in the gap at 1463, it's worth a long, but it's just moved from 1354 nonstop over the last couple weeks, and I'd wait for a pullback. I hope that it goes up a little bit more, maybe up to $15 or so, and then it can pull back to this 1463 level and then get long up there. But I would wait. I wouldn't take the long position at this point. HIBB as a short. Honestly, I don't know how these people are in business, just being in their stores. But, stocks and business, I guess, sometimes can run completely opposite of each other. 54.41 is probably the level I would... Let's go 55.52. It's two different perspectives. You could say, I want it to clear this, conglomeration of price action here, or you just want it to clear this level of price action here. So 55.41 or 55.52 would probably be the two areas you want to target. Just a couple more, and we're going to wrap this show up. TSL. Got a bull flag working in TSL. I'd say if it breaks above 551, it might be worth taking a long position on. I'd be careful with these because they are highly volatile stocks, these solar plays, and they do have a history for just killing you on an overnight basis. Probably about, you can keep a pretty tight stop loss on it, so 511 would be my preferred stop loss that I would take on it. So yeah, it's probably like 6 or 7%, but you're talking about a $5 stock, so you can't expect to have a real tight stop loss on it. So if you wanted to, you could probably get away with a 516 stop loss, which would only make it about 34 cents, 35 cents, and might help out some. That's going to do it for today. I appreciate y'all sticking around, and if you guys have any questions, feel free to hit me up at Ryan@SharePlanner.com or just in the chat room. I'll be around all day. Take care and God bless.